we've got David Widener here to tell us how the Facebook IPO has been a stunning, stirring success for American capitalism. There you see Mark Zuckerberg ringing that bell on that fateful day just a few days ago. It looks like a bad Woodstock reunion, and in fact, it's turned into a bad Woodstock reunion, David. $27 a share, losing $1 a day, as you noted in your column. Tell us why, as it loses another 4% on this Thursday, why this is great.
Everyone in the crowd there, I think, was putting in a sell order. That's why they were raising their hands. And they're still putting them in. We're down another $1. In fact, at this rate, Facebook will be worth zero before the end of June.
All right, let's posit that it won't be worth zero.
All right,
and let's posit it's worth something, but less than the IPO price. Tell us why everyone has got their perceptions wrong.
I think for two main reasons. And the first one is that you have to look at the overall IPO market to begin with. And, you know, we look at Facebook as a flop because of the hype around it. I mean, this was the most hype, I can't remember, maybe since Google, this was the most hyped IPO that we've seen. And to those expectations, yes, of course it was a flop. But when you look at sort of the dynamics of the IPO marketplace is really in trouble. I mean,
here's some trends that we'll put on the screen there.
Yeah, 6 IPOs pulled last week, only 8 priced, all right? So you got this 50-50 kind of dynamic happening, and that's actually over the last 6 months, too. And total IPOs...
that's the number of IPOs down.
No, that's the number, that's proceeds.
Okay,
so
proceeds down, right. So fewer IPOs, fewer proceeds.
Or is that 7.5?
Well, close enough.
Well,
David,
they're both down.
Okay, but David, Facebook was supposed to be different. You argue in your piece that you should read on WSJ.com, you argue, I scribbled on here, arguing by analogy, and you compare it to the fate of natural gas shipping company, GasLog.
Yeah.
To which I say,
an engine group.
Who cares about GasLog? Facebook really was supposed to be different, and perhaps we shouldn't expect a 50% pop, but it seems reasonable from an underwriting standpoint that, hey, the stock shouldn't be down from $38 opening to $27 in a matter of weeks.
Right. I think on either side, a big swing in price from offering price to what it's trading for in the secondary market, what it levels at, is problematic, you know, both from a company standpoint, an underwriter standpoint, and a trading standpoint. So I don't think I used the word that Facebook was a ringing success anywhere in the piece, but you know, to say that it was some sort of huge flop is, I think, a little bit misleading.
Right.
I mean, a lot of companies come out on the wrong side of the spectrum, and the market has to do what the underwriters didn't, and that is set the price for the company for what it's actually worth.
So, David, it seems that the lesson to take away from this is about expectations.
Yeah, I would say so.
And the media obviously has a role in expectations. The company itself, I think, probably did a little too much to try to burnish its image prior to the IPO.
Oh, absolutely. Yeah.
So what does it tell us about human nature and the stock market?
Well, it all comes back to caveat emptor, doesn't it? I mean that, you know, you look at these things and you really have to decide for yourself whether or not these are good investments to get into.
Right.
And you can't depend on the media or an underwriter or a company to tell you that you should buy at X price or not. You have to sort of decide where you think, just like when you're buying a car or buying a home.
But isn't it so hard? I mean, when you buy a used car or a home, to continue the analogy, you're looking at what the comparable values are.
Right, and
you're looking at replacement value. These are not numbers in a vacuum, nor is the price of a stock.
And you lean on other sources for help. You know, other people who can evaluate these things as well. But ultimately, it comes down to your choice.
Okay. Well, I look forward to you telling us why the great stock market decline and Treasury rally of this past month is an unqualified success.
Well, I mean, treasuries are cheap, so they must be doing something right.
All right. Thank you, David. We look forward to visiting with you soon.